We've never seen anything like this. There's facilities that are selling out of their products. We're putting people on the roads, so it's crazy right now. So we have seen some monster moves in the market lately for some pretty obvious players, right? The remote work plays, big tech, and e-commerce have all been huge. But what's next? Well, in today's video, I'm going to give you 3 stocks that are just catching fire here that have nothing to do with staying at home. In fact, they are just the opposite, and I think they have plenty of room to run. All that and more coming up. What's up, everybody? My name is Brad, and this is Own the Chaos. The stock market is crazy, it's chaotic, and I believe that this channel can help you own it. Make some money and make a positive impact on your life. And yes, guys, I am bullish as ever as far as the stock market is concerned, and I am sorry, I just cannot hop on the doom and gloom bandwagon. The thing that people fail to understand is that the stock market is a forward-thinking vessel, and it could not care less about what the economy is doing right here and right now, but it moves on what it expects to happen in the future. And right now, it's looking pretty damn good. We are experiencing one of the biggest transfers of wealth in our lifetime, as I disclosed last week, and those who are the haves are spending their money. We have already seen how retail spending was off the chain last month, and over the last several weeks, RV sales of all things have been going insane. Take the Prevost Legendary, for example. It's a 45-foot RV with 3 televisions that rents for $3,500 a day. And that's cheap compared to the Prevost Marathon that rents for $7,900 a day, $39,500 a week, or $158,000 a month. Goss RV Rentals, an industry leader, recently stated that it was unbelievable, describing the rise in demand this spring. Hey, do you know what else is pretty unbelievable? The growth of this channel has been pretty damn unbelievable, and I think that it has a lot to do with all of you who keep crushing that like button. So if you'd like to help others see this channel and own the chaos, keep it up. Anyways, during the first 3 weeks of May alone, inquiries were up 350%. This was a huge reversal from the immediate Rona reaction. They said that, quote, about the middle of March, we just kind of hit a standstill, and not only that, we were probably at 10% revenue for the month of April. While one-way rentals out of New York City happened early on, with the economy beginning to open back up, the floodgates are now open and demand has never been higher for Goss RV. They've gone on to say, and quote, we sell them, we rent them, and it's just been amazing. We've never seen anything like this. There's facilities that are selling out of their products. We're putting people on the roads, so it's crazy right now. Which brings me to my first stock, and that's going to be Thor Industries. Ticker symbol THO is currently trading around $114 as of this recording. And Thor Industries makes the first stock on my list as an industry leader, and it's perfect for embracing the great outdoors, which according to the KOA, or Campgrounds of America, is going to be the safest way to travel and vacation for the foreseeable future. The company makes RVs and travel trailers like the iconic Airstream brand. Shares of Thor are up about 50%, but I wouldn't let that keep you from grabbing some shares here. It's on a recent pullback here at 114, and I really like a bullish case here to 150. And there's a lot of experts that agree with me on this that don't see demand stopping anytime soon. And I mean, think about this from the perspective of safety. You can travel alone with your family or quarantine friend group and see sites across the US. And unlike with many other forms of travel, your exposure to others is much lower. And who wants to travel thousands of miles in a minivan cross country with 6 kids, some grandparents, having to stop every hour because each kid has the bladder of a hummingbird? What? I guess that was just me growing up. Anyway, for right now, demand is significantly growing, and Thor, as well as Winnebago, ticker symbol WGO, is winning as well. By the way, WGO was featured on Stockwatch Sunday, and I think they're going to crush earnings this week, so keep an eye out for that one as well. Look, if you're still skeptical, consider this. After a rough first quarter, much like everyone else, Thor Industries is seeing consumer demand for RV models that range in price from $100,000 to $800,000. Plus, demand for Airstream travel trailers is so high the company can barely keep up. This to me is still a solid buy, and as mentioned, $150 a share is not far off in my opinion. Next up, we have Expedia Group, ticker symbol EXPE, and is currently trading around $81 a share, which is about $45 from this pre-crash high still. Early in June, Bloomberg's Olivia Carville reported on the surge in short-term rental demand. Companies like Airbnb have severely taken a hit in 2020 and even talked of delaying its IPO when states executed their shelter-in-place rules. Hosts struggled to make ends meet, but now there are two things that are currently creating this surge. The first one is that many consumers are simply turning into their pent-up demand. They want to travel, and we've seen that in the RV industry as explained before, and now the tourist hotspots like Florida have reopened, nothing is stopping them. One benefit for short-term rental brands is that the personalization and isolation makes an individual rental seem a little bit safer than a hotel. The other factor here comes from remote workers that are sick of working from home. Sure, it's nice to have not had to deal with traffic these last few months, right? But after a while, you get sick of looking at the same four walls. Trust me, I've been doing this remote work thing before it was cool, and I can't stand looking at these four walls for too long. That's why many people are opting to bring their laptops and hit up cabins and beach rentals for a few days. You can still get your work done if need be and still ease the cabin fever. And here's where the case for Expedia comes in. Two of its brands, HomeAway and VRBO, cater to the short-term rental trend much like Airbnb. HomeAway helps match travelers with specific destinations, including tree houses, which, after I did some research, I totally need to do this. If any of you have done this, I need to get some comments down below about this. Give me the scoop, people. Is it awesome or what? VRBO is more of a true competitor to Airbnb, and search interest for the company is actually up in 2020. So that could make a strong case for demand here. In my opinion, Expedia has a strong case for a rebound, and it may not be long till we see those pre-crash highs within the summertime. Okay, before I get to my third and final stock here, I want to invite you over to the Chaos Crew. By clicking the join button, what you will get is a daily watch list for me. Get a snapshot of what's moving around in the market for potential plays an hour before the market opens. Also, you get some pretty sweet looking badges that signify that you're part of the Chaos Crew as well. For $4.99 a month, it's a pretty sweet deal, and it helps support this channel. So if you're interested, I would love to see you there. Okay, so the last stock we're going to cover today is Brunswick. Ticker symbol BC is currently trading around $62 a share and is almost near its pre-crash highs. And there's a few reasons why I think this is going to go even higher. Shares of outdoor-oriented companies, such as the RV makers I spoke about earlier, have gone absolutely insane, rising more than 20% this year, and for the record, I do think they keep going. But boating stocks, however, have lagged behind their RV counterparts, which makes this an opportune time to consider Brunswick. At first glance, Brunswick looks like a risky investment, but probably not as risky as Genius or Hertz, am I right? The recession has taken its toll, with sales expected to be down 12% this year. Brunswick had a poor track record in past slowdowns. It earned $2 to $3 a share in the run-up to the financial crisis in 2007-2008, but lost more than $5 a share in 2009. But that was a different Brunswick, and it was a different time. Today, it is devoted to making boats, including Boston Whaler fishing boats and Sea Ray motorboats, as well as Mercury brand boat engines. Last year, Brunswick rang up sales of $4.1 billion and earned $371 million, or $4.33 a share. The company has been cutting costs, and about half of the recently announced $50 million in cost savings from the engine manufacturing business should be realized in 2020. They also own Mercury brands, which you're probably familiar with, and between Mercury and Yamaha, they take up about 80% of the market share when it comes to boat engines. In my opinion, Brunswick deserves to be higher, and given expectations for sales and earnings growth and the company's strong market position, I think that this will go higher. Analysts expect sales to climb 12% next year and 5% in 2022, and I'm willing to bet they are far undershooting this. Longer term, Brunswick shares could benefit as boat sales rise again, with its business streamlined and sales starting to pick up. Brunswick could be able to earn close to $5 a share down the road, which, if you compare this at an RV company multiple, its stock could be priced nearly $90, which means 50% increase from here. I have to believe that if RV sales are going nuts, it's only a matter of time before we see this happening in the boating industry, and Brunswick stands to be a huge benefactor. But let me know what you think of these in the comments below on these three, and if you happen to miss last night's Stock Watch Sunday to prepare you for the week, be sure to click this video here, or if you would like to see my top 5 stocks under $10, click this video here, and as always folks, I will see you all before the bell, and B Smith is out.